Good evening, you're watching Stockwatch with me, Zinati Kuma, and joining me to take your stock-related questions tonight are Thamsanqa Neta from Shallow Capital and Devin Shutte from the Robay Group. Please be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag Stockwatch. Thank you so much for your time, gents. Not a good day on the markets today. I was not at work yesterday, but I do believe that the markets were also in the red. Tammy, what can you say about how the markets have been trading this week, and particularly this just seemingly, I don't know, would you call it a risk-off trade at this point? Because I also noticed that the rand actually isn't that weak.
I think it's more uncertainty about what's going to happen in this final week, especially around when you're discussing coalitions, who's going to govern, how they're going to govern, and so on and so forth. I think that's largely the rebalancing of that. I think everything will settle properly in the next couple of days when there's certainty about who's going to run what and how they're going to go about doing it.
Yeah. We know the local uncertainties, but also are the global uncertainties also adding to that, because we've seen quite confusing and contrasting data coming out from the US on the labor market, Devin?
Yes, I think global factors are also playing into it. Probably two things. You speak about the labor markets, and that's really feeding into the fact that inflation is potentially stickier as a result if those labor markets are stronger, and then we have a higher for longer. So a lot of Fed watchers are really going to see what those FOMC minutes are this week. I think that's tomorrow. We've also got US CPI tomorrow, so that's a big one. And then, of course, not just our politics, European politics are really kind of taking a step to the right. France is, in a very interesting predicament at the moment. Macron calling for elections there. And I think, exactly as Tammy said, that just adds to this melting pot of uncertainty that we've had this year. And it doesn't look like it's getting any better.
Yeah. Well, actually, a sector on the JSE that doesn't really seems to be shrugging off the uncertainties, the retail sector. So on Friday, we did see TFG coming out with results. I did see it leading on the gains today on the JSE, I think up about 5%. And then I also saw that 91 increased its stake in SPAR. Let's start off with TFG. Tammy, 3 days after the results of TFG, investors are still plowing into the stock. Does it seem like there's still a lot of upside in the stock?
I think it's an indication of the consumer health at this point. When your revenues jump by 10%, I think that's a significant change from where we were looking at retail a year ago. I think it's also a key indicator for the future of the health of the consumer. Headline earnings were up just to about 3 billion, I think if just under 1%. And they've surged in sort of cash generated from operations when you get their cash flow statement. So there's a lot that has happened that has been positive for the sector, and it's an indication of where we are, especially on the consumer side. Retail has struggled quite a bit over the past couple of years, but it's showing some signs of consumer health, and that also bodes well for the economy at large.
Well, but I mean, not all animals are equal, because as much as we're talking about, all these numbers that TFG is pumping out, Woolworths, for example, taking out the food business, clothing business isn't doing so well. So would you say that maybe, Devin, TFG is not just the strong indication of a recovery in the consumer and the resilience of the consumer, but also that it's within the business model as well that's really working in their favor and how they're operating?
Yes, I would say that. I mean, the Woolies missteps in their clothing business is well documented, and that just seems to be an ongoing debacle that they can't seem to correct. I think TFG is executing incredibly well. I think if you cast your mind back maybe 12, 18 months ago, there was a lot of concern with, the big global online retailers coming to South Africa. Think of Amazon that's now here, Temu and Shein. But what TFG did incredibly well is they launched their own online offering that's really growing fantastically well, and contributing significantly to those earnings, as well as driving some margin expansion. So the online platform Bash has really been well received. I think there's 3 or 4 million app downloads in its first year, which is fantastic for the company. And I think why the market got quite excited about these results is they're seeing that as a really strong growth driver going forward. So yeah, I think they're doing all the right things. I think they've made some smart acquisitions recently, and yeah, shareholders are quite happy.
All right. Well, let's go into questions that have come from our viewers. Stepping to the US and also China, the panel's view on Tesla versus BYD. Tammy, what do you make of this competition?
I think just on scale, BYD's got a larger market and can compete quite competitively in China against Tesla. I think the rest of the world, I think Tesla's pretty strong. I think the key issue would be who continues to sell more cars more frequently. And I think at this point, if you look at sales and nationalism, I think the Chinese will have a much bigger scope for that. Also, the planned Mexican plants to import BYD vehicles into the US is also quite an aggressive stance. So if I were to choose between the two, I would say BYD in terms of being able to take over market share. However, you've got to consider liquidity and pricing and the value of the company. But in terms of competition, I think BYD is in a much better position to compete, especially given the market size in China, the support of the state, and potential expansion into North America.
Devin, what would you deem as more attractive here? Tesla or BYD, just taking a look at, the environments, the strategy, but also really the actual stocks and the valuations?
Yes, I mean, it's no secret. I've been quite a China bull recently on the show, and I'd agree with Tammy that BYD is a more attractive proposition. Tesla does have some very good redeeming features, and all the data it has on autonomous vehicles, I think, is probably where the growth area is. But if you're looking at EV production, I think BYD's just got a far larger addressable market. I think there's huge growth coming in there, and I think the valuation is more attractive, so kind of gives you a good package there when comparing it to Tesla.
Yeah, all right. Well, another question as we're talking about offshore stocks, your view on Novo Nordisk and Eli Lilly, whether you hold them in your portfolios. Of course, these ones have been quite popular because of their diabetes drugs and Ozempic. I forgot which one makes Ozempic, which is now also a weight loss phenomenon. Tammy, your take on do you own any of these, firstly?
So I'm pretty skeptical when it comes to new drugs and pharmaceuticals. I think we learned our lesson with Moderna during COVID. So a new drug entering the market does not mean that it's going to drive revenue sustainably going forward. So I think I typically want to stay away from the new drug evolution. I want to see if this drug can take hold. Does it have sustainability? Will it be able to drive healthy growth going forward? So my stance would be wait and see on either of the stocks. I think just a historical study on Moderna will give you some insight into how new drugs entering the market and driving a phase can have some uptick, but it's not sustainable over time as an investor.
Well, Tammy, just sticking with you, I mean, you're talking about, how you want to stay away from, this trend of new drugs entering the market. But would that make you then stay away from the whole pharmaceutical sector, or are there stocks where you'd be keen on in this space?
Yeah, definitely be keen on Pfizer. I think
Okay.
they are doing a good job and executing well. If we're talking offshore,
Yeah.
and I think they have such a hold on the R&D side of things, which is quite a large chunk of the expenditure, and are able to evolve going forward. I think the key issue around pharmaceuticals is the R&D cost, and
Yeah.
then the sustainable earnings from the drugs that have been produced going forward. And new drugs often take time to reflect and repay the R&D costs. And if you're not a big enough sort of ship to be able to carry those costs until you find your new stream of revenue, which doesn't result in some addictive drug across the country, I think you've got a chance of making it. The new drugs, new phase is always concerning for me. You can get a big uptick, but it eventually mellows down and the sustainability goes away.
Yeah. And I also don't know how these companies will maintain a market share, because I think just the other day I was reading a headline that there are some Chinese pharmaceutical companies that are making the generic version of Ozempic. Devin, Novo Nordisk, Eli Lilly, do you have any of these in your portfolio? Would you be keen?
Short answer, no, we don't own any. I think if you've been a shareholder the last year or so, you've been you've been pretty happy. But yeah, I mean these valuations are just really lofty, and I think Tammy's spot on is that you're betting on kind of single product risk. If it pays off, it's fantastic. If it doesn't, you really get punished as a shareholder, and it's highly competitive. I mean, although there are patents and all of those, as you've just said, those do eventually expire, and the regulatory burden on these companies is significant, and the lobbying and whatever else goes on behind the scenes. So I just think there's too much you can't control as a shareholder here, and as a result, not business models that we would look at first.
Guys, is Aspen being overlooked here, Devin?
Potentially. So remember, they specializing in manufacture and also the non-patent drugs.
Yeah.
So that is, I would argue, quite different. And Aspen's transformed over the years. It's really gone from a kind of a higher growth stock to more viewed, carries the multiple, more of a manufacturer. It's not dead cheap at the moment. I mean, I think its earnings multiple still low 20 times, but yeah, I think it's probably normalizing from a valuation perspective. I think it does have some exciting growth prospects in the markets it operates in, but yeah, not one you rush out and buy, but definitely one that should be on the radar, to answer the question.
All right. Just before the break, we were talking about Aspen, and Tammy, do you have any thoughts on Aspen? Devin was talking about the evolution of Aspen.
Yeah, I agree with him largely. The manufacturing business is where they've started to focus on, and I think that's going to serve them well going forward. I think in reality, the pharmaceutical industry, over time, you work yourself out of IP. So there's only so long you can maintain a drug. And for you to own one of these stocks, you would have to own them for a period of, say, 10 years. Yeah. Whereas now you've got a producer who can actually produce a product and makes it available generically to a very large market in terms of South Africa. So I think, yeah, that's a massive advantage that they have. I think they could add other pieces on drug development and so on and so forth, but the ability to manufacture generic drugs at scale, I think, will always give them a strategic advantage over those who are spending money trying to develop new drugs.
All right. Well, let's cross on over to the PGM space. There's a question on Impala. Can the panel ask the panel, is platinum a buy at these low stock prices? If the interest rates start to drop, will this give platinum stocks a boost? Let's start off there. Devin, these low levels, do you think that it's time to nibble? Have they found a bottom?
Yeah, look, I'm not sure, and the viewer's trying to make a connection with rates. You could few linkages together there and perhaps argue yes. I think what you really got to look at in any commodity sector is the supply dynamics of it. And there is still some oversupply, overhang in the platinum space. I think there were some stockpiles that are still being worked through. I think there's also, from the demand side, platinum was, was being called to decrease significantly because of the move to EVs. But I think the case might have been overstated in the short term. So to answer your viewer's question, I think there is an opportunity in platinum, a cautious opportunity. It's a single commodity or a single basket, let's call it that, the PGM basket. And so as a result, you've got a massively cyclical company, and as a result, cyclical earnings, and as a result, very cyclical share price. But the share price is starting to move into territory that is looking attractive, but with a health warning that this could still go significantly lower. The impact on rates, yes, possibly, but I'd probably more look at those supply dynamics and see if there's a link with rates there. Might not be as direct.
Is the link with rates not like a short-term move? For example, maybe the viewers thinking that with lower rates, there's more demand in the products that have PGMs, for example, your cars and all of that. Tammy, is that the link, and is it short-term?
Yeah, I think it's also a view on the rand, that the interest rate differentials across other bond markets or larger bond market. So it's also a view on the rand.
Okay.
But I think at the end of the day, it comes down to, can you provide the market with the product? And I think we've got to start firstly by seeing the outcome of the BE deal they completed in Impala. So there's those outcomes that have to come through the wash as well. Can they produce? Yes, they can. But as Devin said, they're single stock. So when platinum is up, everyone's happy, but when it's down, everyone's sad. So I think that's a big risk to carry if you look at comparable companies who also are in the same space, Sibanye, for example, who have a more diversified portfolio. Not that they're doing amazingly themselves, but comparatively, if you're going to take a risk, you want to manage that risk by ensuring it's a multi-commodity risk. With Impala, you're all in, and given the rules the EU wants to put in place around EV vehicles and so on and so forth, there's always going to be some volatility around the price of platinum and its future, and who owes what. So the supply side dynamics of it. We've also got to consider that we as South Africa are at the bottom of the earth. So logistics concerns are always going to be meaningful in the cost of reaching the market with our product. So there's a lot of dynamics there, and I don't know if it's a good bet to look at one commodity stock given those available risks.
Well, if you're really just keen on PGMs and you don't want to diverse and you really want to take advantage of these low prices, talking about risks with, for example, Anglo-American Platinum, which I know is a favorite, and this risk of corporate action, Devin, do you think that would maybe push keen PGM investors to then move to the other PGM stocks like Impala?
Zanati, it's possible. I mean, yeah, I think there is definitely heightened caution around Amplats and, potential spinning out in whatever corporate activity gets decided on there, the potential overhang for sellers. So yeah, I think there is caution. Are they then going into one of the other listed platinum counters? I'm not sure. We haven't really seen Impala share price move much since we've been watching that Bulletin Anglo news flow unfold. So yeah, I think it would be interesting. I think, as you say, there are quite loyal shareholders in the Amplat stable. So yeah, they're probably being cautious and waiting to see how that plays out.
Devin, I want to stick with you. This question is specifically for you, but Tammy, you're also not going to get away lightly. I will still ask you the question. It's on capital appreciation. Earnings yield 12 and dividend yield 9%. Best small cap on JSE? That is a question. Devin, would you go that far?
Sure. That's quite a big claim to fame. Yeah, look, capital appreciation. I mean, I think it's done well for itself, and I mean, I think that kind of group of businesses, they've really put it together quite nicely there. I think what's performed particularly well is the payments division. I think that's giving them really good annuity income there. I think software division less so, unfortunately. That's kind of more chunky business, and it's signing big deals and contracts there. But I must say, they've really got nice partnerships with some good providers there, doing all the right things. Yeah, whether it's the best listed stock of the JSE, I'll leave that to the viewer's opinion. But yeah, they're doing some of the right things and one to keep an eye on, no doubt.
Yeah, doing right things, Tammy. Best small cap on JSE or not?
Look, we hold it, so that's saying something. But
Okay.
I think, like Devin said, the payment side is doing very well. It's a good. They had a decent surge in revenue,
Yeah.
almost up 20%, if I'm not mistaken. So they've shown that they're able to do the job. But at the end of the day, they're a technology holding company, right? So you judge them by the not just the revenues and the cash they generate, but the valuations they build on new assets that they bring onto the table. And I think that's where the rub will be. As a small cap, I think it's doing relatively well. I don't know if it's the best. I don't know how you judge what is the best one.
Yeah.
But what I can say is, as a technology holding company, they're executing well.
There's a question here. If I'm interested in buying the iShares Eurostoxx 600 Automobile and Parts ETF, is there a way to buy it via the JSE or another South African platform? The iShares Eurostoxx 600 Automobile and Parts ETF, Devin.
Yeah, so I'm not sure if you're able to access it in South Africa. It is a UCITS ETF, so that's generally available in Europe or any offshore exchange. It's got some interesting holdings. I mean, I wasn't actually aware of it, but the top 5 holdings are Mercedes, Ferrari, Stellantis, BMW, and Michelin that make up 70% of the total portfolio. So yeah, I think the viewer is probably going to have to go for either an offshore platform or an offshore stockbroking account. You could effectively recreate 70% of this portfolio by buying those 5 shares, or actually buy the ETF. I actually think it's got some merit, and thanks to the viewer, I'm going to go look into this in a bit more. But to answer their question, as far as I'm aware, no, they would need to, for an ETF like this, get regulatory approvals, and I don't think they have that in South Africa at the moment.
Anything to add there, Tammy, with this Revio engine?
Well, look, to be quite frank, it's a great tool for exposure to the automobile sector, but I think it's very Eurocentric. If I remember correctly, I didn't see any other like Asian automobiles. It's all predominantly European ones. So if you want exposure to the European automobile sector, that would be it. The other side of that is a lot of those guys now need to start producing electronic vehicles. So maybe there's a view there that you can take about the European automobile sector. But like Devin, I would have to dig deeper and see. But there is a possibility of being able to recreate it yourself. But if you can't, you have to find alternative methods to buy that kind of deal.
All right. Well, gents, let us get to your stock picks for today. Devin, what will yours be?
Same one. I've been getting increasingly bullish on China and the investment prospects there. So it's still the China Internet ETF. And really, I think this is an effective, although somewhat aggressive way to get exposure to the Chinese economy. And I think why Chinese markets are looking interesting to me. One, you've still got the economy growing at about, north of 5%. We're starting to see the manufacturing and services sector really expanding quite nicely. And a key one for me is that the retail and investor sentiment only recently in the last month or so has started to improve. That's given a nice kick up to the markets, but the valuations are still massively depressed compared to the US counterparts. I'll leave you with a quick fact. The entire Chinese tech sector is worth a third of what NVIDIA is now worth.
Wow.
And you've got massive companies in there, and I think it's one for investors to look at.
Incredible. Tammy, on your side?
Yeah, I'm also on the tech side, but I'm on the other side of the pond. Microsoft, I looked at their numbers. They're delivering well, especially on the cloud business. It's growing well. Revenues up 17%, gross GP up 18%. They're managing the business well. It's a pretty big ship to turn, and Sasha Nadella is turning it well. So I think that's a stock to hold on to for the long term, in my opinion.
All right. Well, thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Thamsanqa Netta from Shiloh Capital and Devin Shutte from the Robey Group. Up next, The Close. Stay with us.